Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, Coindesk Managing Editor of Global Capital Markets, Lawrence Lewitton, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
How are you?
Very well. Things are positive on the crypto front. Let's take a look at the Coindesk's Bitcoin XBX index right now at $53,950. Bitcoin's still up about 2.4% over the past 24 hours. And the Coindesk Ether price ETX index is at $3,564. ETH also climbing ahead 3.3%. And the new DFX Coindesk's DeFi index is up 595, almost at that $600 level. DeFi is up about 5.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data. So a sea of green, Lawrence, that I'm seeing. Also, your favorite, Bloomberg came out with a Tether report. Tell me what's going on.
Yeah, it was actually a very interesting article written. It seems to have taken some time for them to put it together. But some of the interesting points is that, well, for one thing, the former head of one of the banks that Tether used said, yeah, listen, they're kind of running this thing as a hedge fund where they're investing their assets and trying to take home the profits. The other thing is that Celsius apparently was a recipient of about $1 billion worth of Tether, about $1 billion, and they seem to pay between 5 and 6% in interest to Tether, and that of course has been something that's kind of been circulating in the ether for a while. Pardon the pun. That Tether has been lending out to all these crypto firms. Also on their balance sheet, the reporters said that they saw. That, in fact, there was Chinese debt on the balance sheet, and this was prior to the Evergrande debacle. And this has been a big question as to whether or not the assets backing Tether can sustain the valuation if it does have the assets that it has on the books. They say match the liabilities, i.e., the Tether issued. That if there is a problem with the valuation of the assets, such as defaults, which we're seeing right now in China, that whether or not the assets will equal the liabilities, and if there's a mismatch, we got a problem. So that was definitely a very interesting piece. It should be noted that Giancarlo Davosini had a small Twitter presence. He's the CFO of Tether. He deleted his Twitter account yesterday. Not sure if it's related, but he did make comments right before the story came out, he just talked about dinosaur media very cryptically and then disappeared. So
interesting. And maybe it could it's a shame because he makes a good pasta, but maybe this could
They said he was handsome. The piece wasn't entirely negative. They said he was handsome in the Bloomberg piece.
But this could potentially explain the $1.6 billion in Bitcoin that was spontaneously purchased the other day. But Emily, there's other stablecoin news to watch out for. Tell me a bit about that.
Yes, stablecoins are in the crypto news basically every day. The latest report by Coindesk says that the FDIC is looking at deposit insurance for stablecoins up to $250,000. Maybe this would help assure people that there will not be a so-called run on the bank if these stablecoins are not as backed as they claim to be. Gary Gensler also doubled down on his analogy, calling stablecoins poker chips at a crypto casino. So stablecoins are clearly in the crosshairs of U.S. regulators, which may not be a bad thing.
All right, let's take a look at our Spotlight guest.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Back in March, MoneyGram ended their partnership with Ripple, but they found a new one. The international payments juggernaut is now partnering with the Stellar Development Foundation to enable seamless conversion between cash and crypto. Joining us now is Alex Holmes, Chairman and CEO of MoneyGram, and Denelle, Dixon, CEO and Executive Director of the Stellar Development Foundation. Hi there, Alex and Denelle. So earlier this year, Bloomberg also came out with a report that Stellar was looking to take over MoneyGram. Is this this partnership the compromise, Denelle?
Oh, I think that we don't comment on those rumors. I knew that we were going to get this question. Most importantly, what we want to talk about is this relationship that we have, which is bringing which is really melding the online, the blockchain world with what MoneyGram has taken years and years to build, which is their agent network, which is pretty phenomenal. And these on-ramps and these off-ramps for the blockchain space, it's a pretty remarkable thing for us to be talking about, to be able to move forward. And we're really excited about this. It's transformational for this industry.
So, Alex, good to see you again. What is the role of USDC? And does it concern you at all that it's come to light in the past couple of days that the SEC is investigating it? Does that concern you? And how is it being used in this particular instance?
Yeah, those are both great questions, and thank you again for having me back. Yeah, it's exciting times for sure, and I think obviously, anytime that there's sort of groundbreaking changes happening in any industry, right? There's going to be continued insights and outlook from regulators and trying to figure out what to do. I think the surge in crypto is undeniable. The size and scope and expansiveness of it is undeniable, and I think that there's a huge opportunity out there to really begin to think about how do you bridge two very different worlds, right? Traditional financial systems and the new systems out there from a crypto perspective, and MoneyGram sits, I think, in a really interesting position to help begin to bridge those pieces. When you're out in on chain and you're trading in different currencies, oftentimes parking a stable coin is a great way to provide some stability as you think about your next trades. I think one of the biggest difficulties of being on chain is getting fiat off, and so for us, this partnership is extremely unique in the sense that anyone on the Stellar network will be able to instantly, basically, provide funds in and funds out through the MoneyGram system, and trading that through basically the exchange that Circle has with USDC. Simultaneously, in the background, we'll be doing a settlement process with Circle, with USDC as well. And we're very good about it. We're a regulated money transfer. They're a regulated exchange. And we also have a partner, United Texas Bank, in the flow as well to help facilitate the flow of the fiat currency through the settlement process. So it's extremely exciting. I think it's very interesting. And certainly we're going to be proactive with our regulators and our banks, as we always are. And we think there's a huge opportunity to really do something very, very different.
Alex,
so, Alex, were you able to talk to Jeremy Allaire or anybody at Circle about this SEC subpoena there that they came out and said they did?
We spoke briefly about it, but again, right, that's really not the same product that we're talking about today, right? So that's completely different from what we'll be utilizing the service for. So we feel very good about the representations that USDC and Circle make. The representations are certified in terms of the USD backing or the investments backing the stable coin. It's certified by Grant Thornton monthly basis. So we feel very positive about that. And we also feel like we're being proactive with regulators and thinking through what their next set of questions may be.
Alex, I mentioned earlier back in March, you ended a partnership with Ripple. Ripple was co-founded by Jed McCaleb, who went on to found Stellar. So I'm wondering why did you feel Stellar is a better fit than Ripple?
The Ripple product was very, very different, right? We were doing a lot of back end, foreign exchange trading cross border. I think, as we've said, many times, the process and the technology worked, and we had a great experience with Ripple. They tend to focus on a lot of the back end pieces. They're obviously focused quite a bit on cross border funds flow through RippleNet. With the changes and the challenge that the SEC put forward, it was very difficult for us to continue in that relationship based on the way that was structured, and so we both agreed to move on. The partnership here with Stellar is very, very different. It's much more focused on the front end consumer and the ability to interoperate between fiat and the stable coin. So a very partnership. Stellar approached us with the idea. We thought it was a great one. Again, MoneyGram wants to be very proactive and very progressive in innovation and pushing forward across blockchain. and thinking about how we can bridge between the two different worlds. So we're excited about it, and I think it's a great partnership.
This is a question for Denelle. This is sort of a bigger picture question. I think we discussed last time MoneyGram was on the show. But, one of the most amazing things about crypto is its ability to disrupt, for example, the remittance market, right? And, when our reporters go to Latin America and report on remittances, one of the things people say is that, crypto is disrupting companies like MoneyGram specifically. So I guess the question is why, why work with this so-called, third party or intermediary that crypto is ostensibly trying to disrupt?
Well, so we're not trying to disrupt anyone. What we're actually, or any company, what we're trying to do is actually bridge the gap between the existing financial rails and these new rails that blockchain offers, because it really gets to the heart of financial inclusion and allows folks all around the world that don't have bank accounts, that don't have access to the traditional banking system, can actually get it this way. And frankly, MoneyGram is the best partner to be able to do this with, because they have already built this pretty remarkable agent network that can be leveraged to be able to help these people who have digital wallets, who want to be able to transfer their money to their local currency. They can do that with these digital wallets now. Any wallet that's connected to Stellar can now leverage MoneyGram's 400,000 locations all around the world to be able to get on and off the blockchain and to be able to convert it into their local currency. And that's a pretty remarkable thing. So what I like to look at this is like the perfect bridge between the traditional financial world and blockchain. And we need to work together. We need to be able to make this all come together so that we can really create this global financial system that we talk about all the time.
So to both of you, Alex, I'm sorry. Go on.
No, I was just going to say, we don't intend to get displaced either. So we want to participate in the evolution and the change here, right? So I think this is a great way to kind of do that so that we continue to stay relevant in both worlds. So very exciting.
So do you guys, does that MoneyGram have any plans to, for instance, create its own stablecoin? And would Stellar be able to power it?
Well, Stellar can power any stablecoin that's created. But Alex, I leave you the question about whether MoneyGram wants to do that.
Well, actually, at this point, we want to get this product live and see what we can do with it. I do think that, in the blockchain crypto space, I think there's infinite, possibilities out there in terms of, permutations and where this can all go. I think it's super exciting. And so obviously, wanting to be innovative and progressive, we'll continue to look at what's available and what we can do. And right now we've got, three great partners, including United Texas Bank. So, we feel very good about what we're about to embark on. And right now we're excited to get going.
Yeah, and Alex, back in May, MoneyGram made an announcement that they're partnering up with CoinMe to ensure faster payments with Bitcoin and allow clients to interact with Bitcoin. So I wonder what happens with that partnership as you now join Stellar.
Yeah, no, that's a very different relationship as well, right? So Stellar is more about sort of the process through USDC. This relationship with CoinMe is a very exciting one. What Neil's doing over there is I think extremely progressive. Thinking about, again, how do you bring Bitcoin to mainstream consumers? The most important thing he does is think proactively about people without bank accounts or people with limited access to bank accounts. And was very forward thinking in terms of what he's done with the kiosks, and then what he's asking us to do at MoneyGram, which has really helped facilitate the flow of fiat in and out of his wallet. And then once the money's in the wallet, then the consumer can buy and trade. It's very different to see from any other exchanges out there today, which are very, I'd say, process laden around banking and, debit cards and linking ACH accounts. And so, this really kind of brings, the ability to be in the crypto world to people that maybe aren't as mainstream financially. So, that's a great relationship for us. We're very proud of it. And, this relationship here with Stellar has, I don't think will have any impact on that. Again, very different application for a different consumer set.
Mm-hmm. All right. I guess the only concern is, if the SEC suddenly decides that Stellar is a security, is that a concern at all, Denelle?
So it's not a concern from our standpoint. We focus on what the value that we as a participant in the ecosystem can bring to the network. We're focused on network effects on the network, making sure that the ecosystem grows and develops. This whole relationship with MoneyGram is focused on the ecosystem and growing and developing that ecosystem using players that are already in it, like USDC. So this is so our focus is very much on decentralization and the network itself, and growing a really robust and remarkable ecosystem that continues to innovate and create all over the world on this open platform. Without talking to us, without developing with us, sometimes that happens, and so it's a pretty remarkable thing.
All right.
Yeah, and I'll just add to that, if you don't mind. In this particular relationship, right? What's been created on the Stellar, through the Lumen is not relevant to this process, right? So there's the Ripple conversation was different because we were doing a lot of trading through XRP. When the SEC challenged XRP, that obviously put a halt to that trading platform. But in this particular case, there's no risk for us associated with the Stellar relationship in the strange event or rare event that may occur.
All right. Well, Alex, Denelle, thanks for joining us this morning. Congratulations on your partnership, and looking forward to seeing how it develops. All right, that was MoneyGram Chairman and CEO Alex Holmes and the Executive Chairwoman of the Stellar Development Foundation, Denelle Dixon. All right, coming up, checking in on Asia and the crypto markets update with futures platform, The Small Exchange.
Coindesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. Coindesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
Coindesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
Coindesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 7th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, India has crowned its second crypto unicorn. That's after CoinSwitch Kuber's Series C funding round left the crypto exchange valued at $1.9 billion. We're going to take a look at the continuing rise in popularity of crypto trading in India and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, India's love of crypto shows no sign of stopping despite continuing uncertainty over government regulation. New investors getting on board in CoinSwitch Kuber's $260 million funding round include Silicon Valley's A16Z and Coinbase Ventures. Existing investors include Sequoia, Paradigm, Ribbit, and Tiger Global. They also participated in the round. Forecast News' Monica Ghosh has more from India.
CoinSwitch Kuber has come a long way since its setup in Bengaluru, India in 2017 with the aim of simplifying access to cryptocurrencies at a time when most Indians, including the government and central bank, were suspicious of them. Its $1.9 billion valuation means it is now ahead of India's first crypto unicorn, CoinDCX, which is valued at $1.1 billion. Just last month, it said it was the largest Indian exchange in terms of user numbers, with over 10 million customers. That's a massive leap from the 1 million it had in November 2020. One expert told Forecast News, while 10 million is only a fraction of the population, it's huge given only 15 million people in India have to pay taxes.
People who invest in crypto and people who pay tax because of gains from their stocks and mutual fund investments are roughly the same size. That's a huge deal for crypto to have achieved in just a few years. And it will only grow from here.
The newly crowned unicorn says it plans to use the funds to increase its user base to 50 million, launch new services like lending and staking, and offer a product geared towards institutional clients. For Forecast News, I'm Monica Ghosh, Pune, India.
Meanwhile, Australian crypto investors have been reminded the tax man cometh, even for you. In response to questions to an Australian Senate inquiry on fintech, the country's tax office said that crypto transactions are to be treated in the same way as share trading when it comes to taxation. But authorities are concerned that many would-be crypto taxpayers are actually not aware of that. Forecast News' Lachlan Keller reports from Melbourne, Australia.
Under the ATO's guidance, private taxpayers are subject to the capital gains tax regime anytime they sell, swap or exchange cryptocurrency, with the net capital gain or loss to be reported on their income tax return. This latest advice forms part of a campaign by the ATO to better educate people on their crypto tax obligations. One newcomer investor told us he was completely unaware of these obligations before we asked him to speak on them. But Kraken Digital Asset Exchange told Forecast News they do their best to make their clients aware of the obligations and believe other exchanges behave similarly.
We urge all of our users and any other crypto aficionados in the space to speak to their qualified accountants when it comes to understanding tax obligations better. But the important thing is to keep records, and keeping good records makes the job very easy.
Michael Pacina of Piper Alderman told us the ATO has broad data gathering powers, and that anyone trading with a digital currency exchange in the country should assume the agency has access to those trading records. For Forecast News, I'm Lachlan Keller from Melbourne, Australia.
And finally today, let's just stick with the tax man here, because Korea says it will not tax NFTs. Why? Well, that's a good question, and one the country's finance minister initially stumbled over answering. At the National Assembly's annual review on Wednesday, Hong Nam-ki was asked about the amended income tax law, which includes taxing crypto income from January 1st of next year. When asked if that tax is ready to be applied next year, he said absolutely yes. But when asked about taxing NFTs, the minister was not so certain, initially saying there's still some controversy over whether NFTs count as virtual assets. However, he later rehashed that answer, saying that, well, right now, NFTs are not virtual assets, at least not considered virtual assets in Korea. Thus, they will not be taxed just yet. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief of Forecast News, Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, how quickly the markets change. Checking in on the Coindesk Bitcoin price XBX index, now slightly in the red, about 0.4%. Bitcoin trading at $54,135. The Coindesk Ether price ETX index is at 3,577. ETH is still chugging along in the positive territory, 3.7% up for the past 24 hours. And the new DFX Coindesk's DeFi index is at 592, also making an advance of 5% for the day. Joining us now to discuss the crypto markets is Don Roberts, CEO of the Small Exchange, which offers futures trading. Hello there, Don. So we're seeing
good morning.
Good morning. We've seen this bump in Bitcoin for the past couple of days. A whale buying $1.6 billion worth of Bitcoin. Who do you think it might be, or what do you think is behind this bounce?
Well, it certainly wasn't me, I'll tell you that much. But I think that the continued global adoption of the digital asset markets will continue to spur large block trades or acquisition of the actual digital asset to further the market, right? And you guys are doing a great job. Christine, Lawrence, Emily, I watch you guys every morning, and you are the biggest fact-based source of information that I get regarding the digital asset space. And having firms like MoneyGram and others join the digital asset, I don't want to call it a revolution, but it is, right? It's here to stay, and it will continue to grow. And with your guys' help, the education that you guys provide will continue the furtherance of the markets. And I'm not blowing smoke up your patooties here either, so.
That's fine. You can all you want, but Don, but back to Christine's question a little bit is that this big whale buying, was it related in any way? Do you see any relationship between that and some of the credit crisis right now happening in China? It seems that the past few days or a couple of weeks here where you had all this problems with lenders, creating sort of financial instability in China. Do you think that a whale buying that happened yesterday, such a large amount in a market that isn't able to necessarily absorb $1.6 billion in buying all at once, does that indicate some sort of more of a rush to get out of a position, or a rush to move money out of a place rather than a long-term purchase?
I'm not entirely convinced that it's a rush to get out, but in the traditional markets, there's always this collateral trade that will happen where someone will foresee or create an arbitrage opportunity between traditional markets, exchanges, different products, etc. And I think it's more of that, Lawrence, that people are diversifying their exposure to certain assets.
Hi, Don. Thanks for the kind words about the show. Just like kind of a bigger picture question, what is driving this most recent rally? Why is Bitcoin shooting up in the past week or so, despite bad news from China, regulatory uncertainty from the U.S.? What do you think is going on?
It's the further adoption. The more the public gets educated, the more the traditional financial institutions get involved in the marketplace and realize that it is not going away, that there are opportunities in the market to trade, hedge, speculate across different asset classes. I think, Emily, it's just going to continue to grow. Like MoneyGram, I was very excited. I wasn't aware of what MoneyGram was looking to do. And that just increases the capability of putting crypto in every wallet, so to speak, or provide that opportunity for every wallet. And I think that that's just going to continue. Look, I've been in the financial industry for over 20-something years. Products come and go, and exposure comes and goes. And now with the development of the asset classes, the different digital assets that are being put out there for investment purposes, opportunity. And look, let's be frank, there's a lot of speculation going on. But the sure sign of maturity of an asset class is when people start offering derivatives on those products to provide access, to create more of a strategic investment. And that's going to continue. Look, the crypto and digital asset space, although it's grown dramatically since the first time I heard about cryptos in the early 2000s, that this was coming from a friend over a drink in a bar, the world has changed. Like, it's past the early, I think it's getting much past the early adopter phase, and it's become a mature market.
So speaking of derivatives, you're obviously seeing the futures market. Are you noticing anything interesting in the past few days in terms of the curves, the futures curve? Are you seeing any particular points that are of interest that's happening right now in the futures market?
Well, the drive up in the asset market, in those assets, is primarily due to accumulation or collateral trade, in my opinion, and the increased exposure. In the futures markets, especially on our exchange, we've seen people, instead of looking to day trade or scalp the asset, people are actually buying it and holding it for a little bit longer of a period of time. And as our products like we can offer, and other exchanges can offer, I think we're going to see more of that, Lawrence. I really do.
Okay. Don, I can't help but notice behind you, is that a bear in a bull looking at a honey badger? Or I'm just curious.
So, Christine, yeah. So
all right.
When we're a startup. We're just a really good group of guys.
All right.
That got together with a great idea. We built our own trade matching engine. We built our own products. And the bull and bear was kind of the symbol of the incumbent exchanges and their large overbearing presence, and how they drive cost and all this good stuff.
The honey badger.
And that's our little hedgehog.
Oh, hedgehog. Okay, hedgehog.
A hedgehog
Okay,
is a very clever little guy, right? He survived thousands of years of evolution and still here. And because he's a crafty, clever little guy, and we'd like to think of ourselves
Keep going,
as
Don,
crafty,
and the
clever
hedgehog.
people.
All right, we got to wrap it there. But thanks for joining us, Don. Appreciate your insights. That was the
great
Small
to be
Exchange.
on. Thanks, everybody.
Thank you. Thanks for the kind words. That was Small Exchange CEO Don Roberts. All right, coming up, El Salvador's continuing mission to spread Bitcoin adoption, and checking in with Coindesk Global Policy and Regulation Managing Editor Nick Day. All right, welcome back. Time to check in with Nick Day, who's also the editor of Coindesk, the State of Crypto newsletter. So, Nick, we've been watching this Tether news. Bloomberg out with this report. What do you make of it?
Hey, good morning. Yeah, it's interesting. I think a lot of it was stuff we've already known or that has been reported piecemeal over the years. I think, really interesting parts to me were, they had a statement from John Betts, who used to be at, I think it was Noble Bank, which banked Tether. Tether's put out a statement saying that they fired him or that he was fired. So, that's something to be aware of. But just the fact that, John Betts is in there saying that he doesn't see it as a stable coin. He sees it as, some kind of, security type product, I think is interesting because he is one of the few individuals who, would be in a position to know about the structure and what's backing Tether. And the other side of it is also the fact that Tether is lending out its reserves. I think we also kind of suspected some of that because, Tether obviously made headlines a little over 2 years ago for lending its reserves to Bitfinex, but Bitfinex is a related entity, have shared corporate parentage, shared executives. What Bloomberg's reporting is that Tether's lending out its reserves to external companies. So Celsius was one example. And I'm not sure if that was known before. I certainly did not. I don't think I was aware of that. And, if Tether's lending out the reserves that are actually backing the coin, then, technically it doesn't have control over that, at that, whatever moment in time that those loans are being made. So that is something I think we're going to want a little bit more information on.
Yeah, Nick, that particular point was made almost at the bottom of the article, just sort of in passing, like, oh, by the way, they have all these assets, these loans from China on their books, and oh yeah, they lend some out to Celsius. What's interesting to note is that happens, or that's coming out at a time when all of these crypto lenders are under intense scrutiny from definitely from state regulators and potentially from the SEC. So does this make things even harder for Tether specifically, or for the stablecoin industry in general? This idea that they're actively lending the coins that they make, that the stable coins that they make, that they're actively lending it out to these crypto lenders that are under such scrutiny.
Yeah, I mean, I think it comes down to, if I had to speculate, where exactly are the funds or how are they being used at whatever, a specific moment in time. So if Tether is lending out its reserves to a stablecoin company and, that stablecoin company is suddenly hit by a cease and desist, which so far, state regulators are leaning towards but haven't executed yet. But if those cease and desists take effect and, could happen in the next couple of months, then what happens to those funds? These lenders are not going to be able to continue generating whatever revenue they would have been generating at the same level. So will they be able to, pay back Tether? Will they not be able to? So I think the questions here is also, what has Celsius done with those funds? Is it using them? Are they holding on to them? And that's going to answer the question about, what risk there might be for Tether itself.
Yeah, we need to get Alex Mashinsky on the line. All right, well, we'll continue to monitor Tether as well as stablecoins news as it continues to develop. Thank you very much, Nick, for joining us. That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. And Coindesk's Bitcoin for Advisors event took place yesterday. Here's just a snippet of what you missed.
The number one reason that advisors say they like Bitcoin, low correlation.
This year alone, we're seeing volumes from the institutional side that we've never seen before.
And I don't actually think we're going to end up being more regulated because I think that that's bad economics.
As we look back in sort of the history of financial services and this sort of new formation of industries, regulation is always sort of catching up.
I think that Gen Z and other younger people are not going to tolerate a world where you have, grandmothers and grandfathers telling you what to do.
Part of what you're seeing here, at least in the intermediate term, is changing investor behaviors for young people, plus the fact they don't have significant assets yet means if you're an advisor serving them, you're probably serving them with a different business model.
And if you try to catch every wave and catch every trend within crypto and within DeFi and everything, you're going to be stuck. You're going to hurt your clients. You're going to hurt yourself. So pick something that you can scale and repeat.
Buy some Bitcoin for your personal account. Send some to a friend, because the best way to understand the future is to play with the future.
If I got individual wallets set up for 100 of my clients, I'm basically positive at least one of them is going to screw this up at the individual level, because just what early adopters could do is not the same as what the average client could do.
There's 80 plus million accounts between Coinbase and Robinhood. It's happening away from advisors. Advisors, if you're listening, you want it to happen away from you. You just want to be able to see it, pipe it into your systems. Again, core four that I talk about: risk tolerance, investor policy statement, financial plan, estate plan. Those are all that matter here.
Do you feel comfortable now asking your clients if they hold cryptocurrency?
All right. Thank you very much to the Coindesk events team for arranging that beautiful event. All right. So 3 million people, about half of the population of El Salvador, have downloaded the state-run Bitcoin Shiva wallet. They're witnessing the volatility of Bitcoin in real time. And now El Salvador is taking another step toward Bitcoin adoption. State-owned bank, Banco Hipotecario de El Salvador, is partnering with an alliance of Bitcoin-centric firms to introduce blockchain-based banking solutions to the country. One of those firms includes Sovereign, a Bitcoin-focused DeFi platform. And joining us now to discuss is Aidan Iago, the co-founder and core contributor of Sovereign. Welcome to the show, Aidan. Great to see you. So tell us a bit about this Bitcoin alliance and what you all plan to do.
Thank you very much. Great to be back, Christine. Just before I get started, two things to point out, which I think are important. One is that Sovereign is not a firm or a company. It's an open source protocol. And as such, I'm not the CEO. I'm just a core contributor like a lot of other people. But I'm excited to talk about what's going on. And I think what's going on is that what we're starting to see are the benefits of using sound money, but also programmable money, and adopting that on the country level. So with the adoption of Bitcoin by El Salvador, they took a very brave leap into the world of sound money. And now, by utilizing the ability to use Bitcoin as programmable money, they're also able to access a sound, borderless, and transparent alternative financial system for lending, borrowing, Bitcoin-backed stablecoins. And I think, the limits are basically the limits of creativity that developers around the world will be able to apply to this.
So good morning. There's no question that this is an incredibly ambitious project, but there's been a lot of criticism about how the actual rollout. I'm just curious, from your perspective, what do you see as the biggest challenges right now?
So I think what we're seeing in terms of a nation-state rollout is something new. And there are a lot of criticisms, but I think whenever you start entering into the space of nation states doing anything, governments doing anything, there's frequently going to be criticism, regardless of what happens. In practice, what we've seen is 3 million people have adopted the Shiva wallet in El Salvador in breakneck speed, in a vanishingly small amount of time. The number of transactions is increasing on a day-by-day basis. And all of this is happening in a way which is interoperable with the Bitcoin Lightning Network, allowing everyone who has a Shiva wallet to be able to interact with the rest of the global Bitcoin ecosystem. We're also already seeing people saving substantial amounts of money by leveraging Bitcoin for the purpose of remittance. So I think across the space, we know that one of the hardest parts of this problem is making things extremely user-friendly. And that's a challenge that the Chivo wallet has, and other wallets that are operating in El Salvador have as well. And so we're seeing growing pains.
And one of the criticisms is indeed that there seems to be a lack of enthusiasm for getting involved in Bitcoin transactions within El Salvador, despite these large amounts of downloads. And as you said, increasing transactions, that's still from a very small base when it comes to the transactions. How is that going to be addressed, or how do you think that should be addressed by El Salvador, by the people there, and how do you think that does it ever get over? Is it possible to overcome those concerns?
Right. So I think Bitcoin is a extremely powerful form of collateral. It's probably the most sound, most easily transportable, most secure form of collateral we have. But it is also growing at an exponential rate in terms of adoption, and as a result, it has a huge amount of volatility associated with it. And so, there are a number of problems to deal with to make it easier to use. One of them, for example, is making it easier to use with bank accounts. And that is part of what the initiative is doing with the Open Bank project with API 3. Part of it is making security and storage of Bitcoin easier. And that's part of what Credo are able to bring. And a big part of it is reducing the volatility, making it useful for everyday transactions. And I think that one of the things that Sovereign's able to contribute are Bitcoin-backed stablecoins, effectively harmonizing between the dollar that El Salvador uses and Bitcoin, allowing you to create a Bitcoin-backed dollar for El Salvador.
Mm-hmm. Right now in El Salvador, we've seen protests regarding this Bitcoin law, technical glitches from the Bitcoin ATM machines, lines of people trying to withdraw money from those Bitcoin ATMs. So I wonder how can you bridge that gap between being able to work with, use this early nascent technology and something like DeFi lending products? How do you bridge that among these people?
Right. So one of the things that if you see, for example, ATMs with lines, some people look at that and they say that's a problem. And I think that's a bit short-sighted. Other people look at it and say this is an opportunity. It's an opportunity to bring more liquidity. It's an opportunity to provide access to the giant pool of liquidity, now well over $1 trillion worth of liquidity in Bitcoin, that is looking for a home where it can do good, but also generate yield. And so the ability to use Bitcoin native lending protocols, integrate them with ATM systems and bank systems, lend Bitcoin where it's necessary, and increase the amount of liquidity that is available to a country like El Salvador and to players in that country is part of what we do to, solve these problems. What we have in El Salvador is something that is a few weeks old and is maturing at a remarkably aggressive, a remarkably quick rate. And part of that maturity is the availability not only to have Bitcoin as a store of value, which needs to be converted out immediately into dollars, but also be able to generate the liquidity directly via the Bitcoin holdings through the ability to allow for borrowing and through the ability to allow for Bitcoin-backed stablecoins.
Mm-hmm. It's certainly an ambitious project, Aidan. We got to end it there, but thank you for joining us and congratulations on this new Bitcoin alliance. And it's a grand Bitcoin experiment happening in El Salvador, so we'll certainly monitoring those developments. That was Aidan Iago, co-founder and core contributor of sovereign. Time now to check in with Crypto Twitter for our tweet of the day. And this one from El Salvador President Nayib Bukele, who is doing a victory lap amid Bitcoin's surge, tweeting, "Since yesterday, Salvadorans are inserting more cash to buy Bitcoin than what they are withdrawing from the Chiva wallet ATMs. And if we add remittances almost 2 million per day, the incoming USD quadruples the outflow. This is very surprising so early in the game." He's your guy when stats are high, but beware when they start to descend. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching Coindesk TV.